Today's Talk About It Tuesday question is, how can someone with little money and little experience capitalize on the real estate market as an investor? All right, so we have to be honest, right? Most people, when you think of real estate investing, think of buy and flip, right? Which is buying a property, renovating it, selling it at a higher price, or buy and hold, which means you buy a property, still have to usually put some work into it, and you rent it out for rental income. So the reality is the barriers to entry for these forms of real estate is extremely high. You have to have a lot of knowledge and skills and either have a lot of or have access to a lot of money. And there is a huge risk if you fail. So let's look at buy and hold. Buy and hold, you have to have the ability to find the right deal. You have to have the ability to negotiate the right deal. You have to have the ability to close that deal. You have to have the ability to find financing for that deal. You have to have the ability then to renovate the property and manage the renovation and the costs. And then you have to, if you're going to flip it, you have to be able to find a buyer at a higher price and sell it. If you're going to buy and hold, almost the exact same process, except after you renovate the property, you have to be able to find and screen good tenants. Then you have to rent the place and manage the property. So a lot of money, a lot of time, a lot of effort, a lot of skill, and a lot of risk, because you're usually risking hundreds of thousands of dollars or millions of dollars when you're talking about investing in those ways. So let's talk about some alternative ways where you can really get a great return on investment, and the barriers to entry are extremely low. The level of knowledge and skills you have to have is extremely low. The amount of investment capital is even extremely low, but the return is great. So let's talk about REITs. So REIT, R-E-I-T, right? Real Estate Investment Trust. So a real estate investment trust is a company that owns, operates a pool of real estate, and it's usually income producing real estate, and they have investors that own shares. So you own shares of a REIT the same way you would a mutual fund. And the good thing about a REIT is that 90% of a REIT's taxable income must be given to the shareholders. So you will receive dividends. So usually every quarter, right? So that's every 3 months, every 90 days. Every 90 days, you will receive income in the form of dividends based on the amount of shares that you own. You don't have to find the properties. You don't have to manage the properties. All you have to do is buy shares and you get dividends. That's a great way to take advantage of the real estate market. Keeping along those lines, we can look at real estate mutual funds and real estate ETFs. ETFs are exchange traded funds similar to mutual funds, except you can trade them every hour on the hour the same way you could a stock. A mutual fund, either one, you own shares of that. But what's different from a mutual fund than a REIT? A mutual fund is a diversified portfolio of REITs and or stocks of real estate related businesses. So you have a well-diversified portfolio of REITs and real estate related companies. Some pay some dividends. There's no guarantee of dividends, but some pay dividends as well, but you also get capital appreciation. The good thing with REITs, mutual funds, and ETFs, again, the same thing, diversified portfolio, except you can trade it on the hour if you wanted to. The good thing is the barrier to entry is extremely low. With many REITs and mutual funds, you can get in sometimes as low as $25, but some have, every REIT, every mutual fund has its own minimal cost. Some are $2,000, some $2,500, some are way more. But you can find one that has an extremely small amount that you can invest, so you can get your feet wet with something that's of minimal risk. So again, You don't have to have a lot of skills. You don't have to have a lot of time. You don't have to have a lot of money, and you can, capitalize on the market. Another way, crowdfunding, which is it's funny because it's similar in some ways, but a little bit different. So crowdfunding, there are companies like Fundrise and Realty Mogul and CrowdStreet, right? You have companies like that, and you should look those up. I'm not endorsing, I'm just saying they exist, where they have real estate related projects that you can pick and choose from to invest in, right? So you have fractional investments in multiple different projects that are related to real estate. And as they make income, you get interest income. So basically you're lending to crowdfunding. You're lending to these projects, and in exchange, you get a return on your investment in the form of interest. So one, you can get it in the form of dividends. In this, you get it in the form of interest. Each has its minimum requirement. Some, I believe, as low as $500 to get in. So again, you can capitalize on it that way. Low barrier to entry, low skill level. There are also companies, or apps, I should say, I guess, where you can have fractional ownership in real estate. So again, you buy shares of real estate, and some of these are commercial, some are residential, different types of real estate. You can pick and choose and say, I want to own a piece of this one, and you buy shares of it and you own fractional shares. So Roofstock is one app that you should look at. Arrived Homes, I believe, is another one that you can look at that allows you to have fractional ownership of real property. So, and again, each platform has its own minimum requirement for investment, but this takes away those years of skills you have to develop. It takes away the years of developing a network of trusted professionals to work with. It takes away, years of having to manage, a property. So these are definite ways. And I'm not saying don't learn those things, but you can make money along the way, right? So this is your entry into real estate, where you can make a lot of good money as you develop the skills to do projects on your own, if that's what you end up choosing to do. Because there's no need necessarily for you to buy and hold the whole thing or buy and flip the whole thing, when you can, again, take away a lot of the risk, a lot of the time, a lot of the capital that needs to be raised by doing it this way. So get on that. It's a nice entry into real estate, and if you're already into real estate, a nice way to broaden your real estate portfolio. I'd love to hear your comments, your suggestions, if you've used these platforms or any of them, what your experience has been. But if you want more stuff like this, please visit my YouTube channel. I have hundreds of videos on wealth building strategies. But please like, share, subscribe, keep the questions coming, and I'll see you next Tuesday.